Welcome to Everything Candlesticks. I greet you. My name is Tabiso Zuma, and today I want to talk about how do I balance, or how can you balance your trading with your work or with your life. Anyway, if you're having a busy schedule, day in day out, but you really want to trade, maybe this video is going to be helpful to you. But before I get into today's content, please do subscribe, and if you find this video very useful and helpful, please do like so that it can reach too many people as possible. Thank you for doing that. So tip number one, if you want to trade but you are a really busy person, if for instance like me, I have a job, I have a 9 to 5, but I am very interested in trading, so I'm not even planning on leaving my job anytime soon. Even if I were to be successful to the point where I make maybe 4 times my salary from trading, I don't think I'll just leave my career like that, because I do believe that we should strive for having multiple streams of income. My goal is not to eliminate one stream of income when I have another one. I want to have multiple streams of income, and I still want to grow in my career, still want to grow in my job, still want that promotion. I don't have that mindset of quitting my job because I have this skill of trading. So okay, tip number one, if you are a very busy person, I would advise you to not trade indices like your Nasdaq, your US 30, your US 500, your German 30s, because those indices, they are very volatile, and it makes it hard for a person who is very busy to keep track of what's happening. Because if you have a job, you still need to focus 100% at what you're doing. You still need to be productive at work, you still need to show up at work, you still need to give it all, give all your effort and your thinking and your planning at work. So if you're also trading your Nasdaq, your US 30, I don't think it's possible for you to forget about your trades when you're working. So if you are trading your Nasdaq and all these other indices that are very volatile and that are very high risk, you will need to go outside maybe to check the markets, and in many workplaces they wouldn't tolerate something like that, because your manager or your boss will need you to give you all right? So number one, stay away from indices, stay away from your Nasdaq, stay away from the very volatile asset. Okay, number two, it is better to be a swing trader, meaning you trade long, you take long-term trades as compared to trading smaller time frames. You take long-term trades, maybe you'll have to analyze on daily time frame, 4-hour time frame, and maybe enter on 1 hour, or maybe even on 15-minute time frame, but with a goal of holding those trades for a longer term, so that you don't need to go and check the markets every now and then, as compared to someone who's scalping. So it's very hard to be a scalper when you have a job, because when you're scalping, you need to get into the market in a very short period of time, take that those few pips, and then out of the market. So if you're in a work environment, it is energy consuming to keep track of what's happening in the market, and also to be productive at work. So be a swing trader. Go check other swing traders on the internet. They're going to give you tips of how you're going to develop yourself to become a profitable swing trader. That meaning you're going to be trading, taking long-term trades as compared to taking short-term trades. Okay, number three, trade synthetic indices. Okay, I know I said the point number one, don't trade your indices, but there are indices that are called synthetic indices. And why am I saying this? Because synthetic indices, they are not impacted by the news, and they are the market of synthetic indices is open 24/7. Even on weekends, when you are not working on weekends, you can still analyze and trade. That market is open 24/7. If you do not know where you can get those synthetic indices from, there is a broker named derive.com, or derive, no, just search derive broker and then register, and then you start trading. There are no news, there are no fundamentals needed there, because those are synthetic indices. They're not indices like your Nasdaq. Maybe the volatility may be the same, but there are no fundamentals behind those price movements. It's only, you need to know your price action, supply and demand, or just have a strategy that works, and then you can trade any time of the day. So in this, maybe you've noticed that in all my videos, I talk mostly about synthetic indices, because that's what I trade mostly. Okay, and then coming to the fifth point, if you are trading the currencies, you must be aware of the news. Okay, there is an app called investment.com, so it tells you all the news that are gonna come in a week. So you're gonna have to check that with that app every day, or maybe on Mondays or on Sunday when you're preparing for your week, and then so that you know that which currencies will have the news and then which currencies are not going to have the news. So I would advise you, if you are a swing trader or you're trading currencies and you're working, you don't have time to go check the market every now and then, to stay away from the currencies that are going to have the news, and then trade those that are not going to have the news. And you must take note of the principle of correlation. Okay, so if the US dollar is going to have the news in that week, so that means in every currency that has a US dollar, be it a quote or a base currency, in that currency pair, you stay away from that pair, because it has a dollar, and you don't want to trade a dollar because it has the news. All right, or you can back test your strategy of trading and see which news that heavily impacts or affects that pair, and then you decide for yourself if you want to trade those news, or you want to trade that pair when those news come. For example, non-farm payrolls is heavily impactful on many currency pairs, but mostly on the pairs that include the US dollar. Okay, so you don't want to trade the NFP if you're a person who has a busy time schedule. Okay, so coming to the last point, not the last one, the second to last one, is you need to pick a market session that is very convenient to you, to your time schedule. Okay, so there are different market sessions. There's an Asian session, there's a New York session, etc., etc. You need to do your research and find out which one that aligns with your time schedule, which one is more convenient for you before you trade. Okay, do that research, and then you know your time schedule, you know which one that's gonna work for you. I know there is a girl that I follow, Black Girl Trades. She trades, I think it's an Asian session that opens at 1 a.m. to 10 a.m. I think, because she's a student. Okay, so she picked that one because it works for her and it's convenient for her, because she's still a student. So, and all her classes, she says, are on during midday up until afternoon, so she's free. She can trade before her classes starts. Okay, so you need to know which trading session that aligns to your time schedule. Okay, and then the last one is have specific pairs that you're gonna trade. Pick maybe, let's say, a maximum of 5, a minimum of 2 pairs or assets that you're gonna trade. because assets are not the same, they don't behave the same, they don't move the same way. So you will know as the time goes of you trading those pairs or assets repeatedly. You will learn how they move, you will learn how they behave, and then it's going to get easier for you, to get used to them and then trade them profitably as a part-time trader. Okay, so that's it from me to you guys, and I hope that the information I shared is very helpful. And if you have any questions, please do comment below. I will attend to those questions. This is Everything Candlesticks. My name is Tabiso Zuma. Thank you for tuning in. Danko.